Cameron and Tyler Winklevoss, welcome to Singapore and thank you for joining us to talk about your exchange Gemini and the future of crypto here on Money FM 89.3. Great to meet you.
Great to meet you too. Thank you for having us.
Guys, a decade ago, back in 2013, you invested some 11 million US dollars in Bitcoin, then trading at just 120 US dollars per token. At today's price level, assuming you still own all those tokens, that investment is worth more than 2 billion US dollars. Of course, a lot less than that investment back in November 2021 when Bitcoin topped 65,000 US dollars per token. Now, we know the last year and a half hasn't been easy for just about anyone in the crypto space. FTX has gone bankrupt, Bitcoin less than half what it was at its peak. And just yesterday, US regulators sued Binance, accusing it of misusing customer funds. So my question for you is, what are you doing at Gemini to pass through these storms and to reassure investors that crypto is a space that is safe and still worth investing in?
Sure. So basically, we started investing in Bitcoin in 2012, and it was very much the Wild West. And we bought a lot of our early Bitcoin on Mt. Gox, which famously imploded. Thankfully, we weren't hurt in that implosion when it failed, but it informed us that the key to making crypto and Bitcoin at the time was the only crypto asset going mainstream was building safe, reliable infrastructure. And that's really been our mission at Gemini, is building a simple, safe, reliable place for people to engage with crypto and Bitcoin. And so we started off and we achieved our New York Trust Company license in 2015 with the New York DFS. And we now have also a e-money license with the FCA, an e-money license through the Central Bank of Ireland for EU. And we're in application process with the MAS in Singapore. So we've always felt that licensing is important. Our ethos is ask for permission, not forgiveness. And we believe the safest, most vibrant markets are ones that have thoughtful regulation that both protect consumers, but also foster innovation. And that's something we've been believed in and been trying to build towards and work towards for the better part of the last decade.
And we'll talk about regulation in just a bit. I'd like to get a sense of your beliefs and how they've evolved. I mean, you're the world's most famous crypto titans, guys bullish on Bitcoin. Trillions have been made, billions lost in the crypto markets. What do you say to people who jumped on the Bitcoin train, but not as early as you did, and who may now be in the red?
So we still think it's early. We wrote a blog in 2020. A few years back when Bitcoin was at 13,000 a Bitcoin. And we made the case for Bitcoin being worth 500,000 a Bitcoin one day. And the way we got there is we said, well, Bitcoin is better at gold than being gold. Across all of the money characteristics that make gold what it is, Bitcoin matches gold or does better. So maybe the biggest point is gold is scarce. Bitcoin supply is actually fixed. So if the price of gold goes up, people will find more gold. If the price of Bitcoin goes up, there will never be more than 21 million Bitcoin. It's truly fixed. It's the only commodity in the world where the supply is known and the supply is fixed. If the price of oil goes up, people find more oil, and on and on and on. And so if you look at the market cap of Bitcoin, of gold, which is 10 trillion, and if Bitcoin is going to disrupt gold, and that's the small bull case scenario, then one Bitcoin would be worth $500,000 US dollars. And so we still think it's early, and that's why we are long-term hodlers of Bitcoin.
Great to hear. Tell us about your new crypto derivatives product, which is a Bitcoin perpetual contract, sort of like a futures contract, but without a specific expiry date. Now, why are you launching Gemini Foundation and these derivatives outside the US, the UK, and the EU?
Well, the simple answer is that you can't get anything done in the US right now. And that's been true for a couple of years. The regulatory climate is hostile to crypto innovation. and it's been too slow. And what that has done is it's pushed US consumers into the arms of companies like FTX, and where consumers have been seriously injured and harmed because the regulatory landscape has moved too slow and there's too much dissonance. So to give you an example of what I mean is the current CFTC calls Ether a commodity. The current New York Attorney General calls Ether a security. The previous SEC commission called Ether a commodity, and the current chair of the SEC, when asked under oath whether Ether is a security or commodity, refuses to answer the question. That's the current state of the regulatory establishment in the US. There's no clarity, there's no rules and guidance. And so we believe that derivatives and leverage are a critical piece of any healthy, vibrant market. For example, people need to hedge their risk. If you're a Bitcoin miner and you mine Bitcoin, you need to put on positions to protect, to short, to protect and lock in that value. There's many reasons why people want to express long and short positions in crypto and therefore need an instrument like a perpetual swap. So it's a critical piece of infrastructure. We can't get it done in the US right now. So we're going to not wait for the US. We want to build it where we can build it. And that's the motivation behind it. We know that there's a large demand for these products. And again, if you look at any traditional market where gold or oil, futures and derivatives play an enormous part in the price discovery and the liquidity and health of these marketplaces. Crypto is no different, and we want to serve the market with a safe and simple platform to trade derivatives on.
Your thought leaders in this space, and this term has been bandied about quite a bit. How would you describe the pace of development of crypto regulation in the US? Are things at a choke point?
Well, largely speaking, they have been, because the regulators have chosen a flawed strategy of regulation through enforcement. It never works. While enforcement is important, once you have a rule book, and if people don't follow the rules, then you, of course, have to enforce that. That is important. But when you don't have a clear rule book and you're just enforcing, it doesn't make any sense and it doesn't work. And we've seen it doesn't actually protect consumers. Consumers want to trade crypto. They want things like perpetual swaps. If you can't get it done in the US, they just go elsewhere. And that's what happened. They went to FTX and they lost billions and billions of dollars. It was a huge miss. The US regulators missed it, and they still haven't created a framework. Now, however, a few days ago, lawmakers started advancing a bill, which is a solution. Finally, people are saying, hey, we can create a rule book and guidelines. So that's a positive development. Unclear how long that will take or something like that to get through, but it's certainly a start in the right direction. And so while the regulators are unable to answer whether Ether is a security or commodity and doing a lot of infighting and wasting governmental resources, hundreds of millions of dollars enforcing and just filing actions against every crypto company under the sun, the lawmakers are actually saying, hey, we've got a solution to this problem. Here's a bill that brings clarity. So that's a positive development. We're supportive of that, and we'll continue to learn more. We have to dig into the bill to learn a bit more. But we've been advocating this for over a decade. And so it's a very welcome development, but I think it will still take a little bit more time.
It would be kind of nice if the U.S. regulators could just get into a room over the weekend and figure this out.
Like the debt ceiling?
Yeah.
Right.
Their job is to create clarity in rule books and guidelines. That's what the American taxpayer is paying them to do. And so they're not fulfilling their duties. And it wouldn't be that hard to get everyone to fly to the same place, spend a long weekend, hotel rooms, and hammer it out. What is Ether? What is Ripple? And can a token start as a security and at some point become a commodity if it's sufficiently decentralized? Pretty basic stuff. that the experts haven't figured out,
Mhm.
and they're too busy infighting with each other, and they put the burden on us, the companies, to figure it out, when our job, we're not the lawyers, we're not lawmakers, we're not the policymakers, we're builders, we're entrepreneurs, we're engineers, and we just want to build, and we're asking for clarity. So we're hopeful that that will change, but that the current state is utter confusion and chaos in the US. And my final point to that is, imagine if that uncertainty existed around what a share of Apple stock was.
Right.
If there was that uncertainty, there would be no Apple, there would be no Silicon Valley, there'd be no capital formation, because people would be afraid to invest in the next startup, because what are they investing in? Are they breaking a rule? Are they going to get in trouble? And so you wouldn't have all of this incredible innovation that's driven the American economy for so long. And that is the current state of play in crypto. And that's bad for builders. And ultimately, that's bad for consumers.
So, what do these legal and regulatory challenges in the US really mean for Gemini's future there?
Well, we're not leaving the US. We're going to keep fighting the good fight. We're going to be a resource and try to continue to educate policymakers, lawmakers, and regulators. So we haven't given up on the US, and we're hopeful that it will turn around in the next year or two. But it means that we're going to be really leaning into and doubling down into other areas around the world where we can actually get stuff done, where we can build. And so we think that the APAC region is going to be huge for future growth for Gemini, and also the MENA region. And that's why we've been on this worldwide tour. We've been to London, been to Switzerland, we've been to Ireland, we've been to Dubai, Abu Dhabi, now we're in Singapore, and tomorrow we're headed to Hong Kong. So that's seven stops. And we've been learning more about those markets. We've been engaging with stakeholders and customers, because we think the future growth for Gemini right now, because of the confusion in the US, is going to be outside of the US.
And how would you describe the reception of these other jurisdictions towards Gemini Foundation, your derivative platform? And is there any confusion as to whether or not it is in breach of securities law?
So we've gotten a very, very positive welcoming in all these different jurisdictions. Of course, our derivatives platform is not available in the US. It's not available in the EU or Canada and certain other areas where it's not, we don't have a license yet. But the focus has been, we've been discussing how do we, get licensing in these regions that we've been visiting, and also continue to invest in the teams there and learn about the markets. We have an e-money license in the UK as well as Europe, so we provide services there and have teams in both Ireland and London, and we'll continue to invest there and look at other licenses we can receive in those parts of the world.
Here you are in Singapore. What are your views on Singapore as a hub for cryptocurrency? I mean, it's really interesting here. On the one hand, there's been a big push for Singapore as a fintech hub. At the same time, it's been difficult for ordinary retail investors to buy and sell crypto. What is your take on Singapore's place in the crypto universe?
We think it's very important, and we currently have a license in flight with MAS. And we were really keen on trying to obtain licenses from regulators that have very strong reputations like MAS. So we're very hopeful that we'll get our license here and look forward to continuing to invest in Singapore. We think it's an important hub for the future of crypto innovation. It will be a big driver and part of that next wave of growth. And this entire region, quite frankly, is very important. We have a team of 25 people here. We are looking to scale and invest more and hire more headcount here. And we're talking to a lot of people in the crypto ecosystem who have actually moved entire teams here or their entire companies to Singapore So it's happening. We're seeing it on the ground. We're hearing it from founders and companies and entrepreneurs that are looking at the world and saying, where can I build? Where is there a clear path where it's straightforward, it's simple, and safe to build, and I'm not going to, get into trouble, or where there isn't a clear rule book, so to speak. And Singapore is that place for many people. And so we're very bullish on Singapore. It's a tremendous country. It's a triumph of great policy. The transformation of this country over the past 50 years is staggering. And we think there's no reason that similar pace can't continue if industries like crypto can be built and flourish here. So we expect to be back here on a regular basis. We have a phenomenal team. We have engineers, compliance people, support people, and they're amazing. And we're hoping to hire a lot more people here.
So the show is all about investor education, and I've been speaking with people who have used Gemini or are planning to use Gemini, and there are concerns that there are reports, I should say, that you've lent $100 million to Gemini. So is this true? Is or was Gemini facing a cash crunch?
So we're a private company, and we don't speak to our financials per se. But what we can say is that we've raised money from many fantastic investors over the past decade. Tyler and I are also big investors in the company and we support the company both with our time as founders, but also with capital. And we were impacted by the crypto winter like our peers, and we're no different. We can't escape the cycle similar to our other esteemed peers. And we're committed to the company. We're super aligned for its success. So we're just building for the future.
Yeah, we've been at this for 10 years, and we God willing hope to be doing this for another decade or 2 or 3 or 4. So we're here for the long term, and so is Gemini.
Well, let's speak about the future and take a look forward. We've seen a major crisis in the banking sector this year with institutions like Credit Suisse, mid-sized banks in the US going under. Do you think these bank failures strengthen the case for crypto?
100%. It's just no longer, well, let me say that it used to be not a question of whether your dollars were safe in a US bank. And the bank failures have highlighted that your money isn't safe. It's unclear whether it's safe. And while the banks that did fail did get effectively bailed out, the depositors got full bailout, so to speak, that's not a given, and it's a case-by-case situation. And I think that a lot of people started to rethink the safety and soundness of banks and whether or not their money's safe there, and are looking at Bitcoin and realizing that could be a really good store of value.
Everybody wants to know, what did you know a decade ago that the rest of us didn't, that led you to invest so much in Bitcoin?
So when we first found Bitcoin, one of the big aha moments was this was money purpose-built for the internet. It works like email, and you can send it and receive it 24/7, 365 through all you need is an internet connection to send and receive. And when you look at all other forms of money, they don't really work on the internet, and they predate the internet. So for example, if you want to send a wire from New York to Singapore, and it's Friday evening, and you've missed the Swift wire cutoff, that money is not getting to Singapore until Monday at the earliest, assuming that there isn't a bank holiday and you put your instructions in right, and maybe it gets there on Tuesday or gets lost in the ether. And it's a very slow system that doesn't work. It actually shuts off. And so imagine if your email shut off at Friday at 4 p.m. and didn't open up again until Monday at 9 a.m. Now, some people might love that because you get to unplug and get a break from being online all the time. But it actually when you look at it, it makes no sense. And that aha moment hit us 10 years ago. And the crazy thing is that the banking system hasn't improved at all in a decade. The same is still true. Your money movements in the fiat system shut off on bank hours, and it doesn't move through the internet. And so that was a big aha moment for us. And then the inevitability of internet money and the need for a store of value like Bitcoin that's truly fixed. And once you start digging more and more into it, and you see all of the money printing going on in the US, the currency debasement, you realize that there's a tremendous need for hard money, something that's truly fixed. And people are starting to get this, understand this thesis. It's the same thing we've been saying. We've been saying the same thing for the better part of a decade, which is that Bitcoin is gold 2.0, but it's actually better than gold. And there are more millionaires on the planet. I think there's something like 40,000 plus millionaires than there are Bitcoin. So there's not even a full Bitcoin for every millionaire out there. And it's going to be a really interesting point when we get to hyper Bitcoinization. Once people realize it's like Noah's Ark. The flood is coming. The US has $30 trillion in debt. Very soon, the interest alone on that debt is going to become completely unmanageable, and it's going to be a runaway. And there's absolutely no discussion about, hey, let's bring in spending or let's reduce the debt. It's how do we spend more? How do we raise that limit, that ceiling? And that bill will come due. And there's certain people who believe it's going to come due fairly quickly, like in the next 12 to 24 months. The timing of these things is, of course, hard, but people are seeing it. Our generation's seeing it. They're seeing all this, the money printing. It's not sustainable. And so the flood is coming. Bitcoin is Noah's Ark, and people will be rushing to get in there. They already have started to, of course, over the past 10 years. And that will only continue exponentially as things deteriorate with the debt in the US and the debt to GDP ratios in countries around the world, which are just out of control.
Well, you say there are not enough Bitcoins for the millionaires out there?
Yeah, and so let me clarify. You can divide Bitcoin into 100,000 pieces, I believe.
Right.
And so you can own very, very small.
It's 100 million.
Okay, I was off by a zero or so. But the point is, you can own small pieces, very, very small pieces of a Bitcoin. So you don't need to own an entire Bitcoin. It's not a binary thing. However, it's a good way to visualize how there's just a lot more people that will want this than there is even for one per person.
Got it. So I'm going into lightning round as sort of a verbal Rorschach test for you guys. Off the top of your head, I don't know if you'll tell us how many Bitcoins you own today.
Probably not.
Well, I had to ask, the corner office was up for grabs. Okay, is crypto winter over, guys?
I don't think it's quite over, but I think that I think we're getting closer to spring and things are starting to thaw out. If you look at the price hit a low around 15,000 per Bitcoin in December in the wake of FTX. Bitcoin is the best performing asset this year. It's up almost 100%. And I believe that the price in the market has spoken and said, you know what, the FTX thing, it's not a crypto problem. It's a fraud problem. It was a bad entrepreneur. Entrepreneurs no longer in the system, and it's in the rearview mirror. And the market is moving forward, and the U.S. hostility and regulatory attacks, they've lost their meaning, and the SEC has just completely diluted their brand because they've gone after everyone. It used to mean that if you got sued by the SEC, it used to mean that you were probably doing something wrong, and now if you get sued by the SEC, it probably means you're doing something right.
Interesting take.
One other point is
that
the Bitcoin halving is coming up in May 2024. So we're inside a year. And it's always historically been a pretty good catalyst for price and the bull run. People argue, is it priced in already? We know it's coming, but it always seems to be a catalyst of sorts. So the last halving was in 2020, and we saw an incredible bull run that was an order of magnitude bigger than the one before. And that previous halving was 2016. And after that, 2017, 2018 were tremendous bull runs. So usually as we come into the halving, good things follow.
Cameron, do you have a sense of when it will be before we see a new all-time high for Bitcoin?
It's very hard to time these things, but I think I agree with Tyler that the halving has always been historically a strong catalyst. And so I think within the next 12 months, we're going to see a lot of hopefully positive price action as we get closer and closer towards the halving. But also a big catalyst is countries and regions, many of which we visited, that are promulgating clear rules and regulations. And so as places like Singapore continue their work, and then we see a new regulatory framework released from Hong Kong, that's of course positive. There's MiCA in the European Union, which I think will go into effect sometime this summer. And so that's amazing. And people will be building in these parts of the world where there's clarity. People aren't going to wait for the US. And I hope the US doesn't get left behind, because we're rooting for the US. We love the US, but if they don't get their act together. But I think, look, we believe that the Asia Pacific and the MENA regions will be a big part of growth. We're seeing it on the ground, we're feeling it, and we think that will drive the next wave, and that could very well be, in the next couple of quarters. And then of course we're looking at the halving, we're 11 months and counting away from that. So the future is bright, I think. Yeah. And I think that it's been a painful year. FTX was horrible, but it's in the rearview mirror. It's behind us, the industry that is. And so we're optimistic.
Well, speaking of the mirror, you're identical twins, but let's see if you differ on this last question. What do you think of Ben Mesrick's book about you, The Bitcoin Billionaires? Would you say it's an accurate portrayal?
I think that he got us more right this time than the first time. In Accidental Billionaires, which became the movie The Social Network, which is hard to imagine, or it's hard to believe that it's already been almost 13 years. So yeah. A lot of folks haven't even seen that movie. So maybe they're being introduced to us for the first time through crypto. There was a time when we would walk down the street and get recognized because of our involvement in Facebook or the movie The Social Network. And now it's almost entirely because of our involvement in crypto. People either they own Bitcoin or they're Gemini users. And so that's been pretty fun. But yeah, Bitcoin Billionaires is a great book. I recommend it to anyone interested to learn more about Bitcoin or our story. And it's a good primer into, if you're curious about Bitcoin and haven't spent a lot of time in the community or learning about it, it's a good starting point.
Fantastic. Karen, any thoughts on the book?
Yeah, I love it. And I think it does a great job of capturing the early days of Bitcoin when we got involved with it. And it's a good read. I think it's a good primer, as Tyler mentioned. If you don't know much about Bitcoin or cryptocurrency or what that future could hold, it's a great way to dip your toe in it and start learning about Bitcoin. And I think, the aha moments, the light bulbs will start going on. And you realize, oh, okay, this is there's a lot here.
Yeah, that's a good point. A lot of the rationale for how we thought about Bitcoin early, what our aha moments were, why we gained the conviction to invest so much so early on, which back in 2012. And if you want a sense of how Wild West the early days were and how far we've come as an industry, obviously 2022 was a really tough year for our industry, but it's important not to lose perspective When we bought Bitcoin, the only exchange out there was Mt. Gox that imploded. And that informed us of how to build Gemini the right way, because the infrastructure was so poor in crypto. And so the book is a great walk down memory lane, and it really puts into perspective how far the industry has come, how much it's accomplished. Back in 2012, there was only Bitcoin. There was no Ethereum, there was no ICOs, there was no DeFi, there was no NFTs. So we've accomplished a lot over the last decade as a industry, and we're only going to accomplish that much more forward. But I think in the crypto winter of discontent, it's a great book to pick up, because you're going to see the positive side of how far we've come and how much more possibility there is ahead of us.
And one final question, will Bitcoin remain the dominant token in the crypto space?
I think that it's the leader for store of value. It's got a tremendous first mover advantage, and I don't see it being unseated as the emergent store of value token. Whether or not it has the largest market cap, I think that remains to be seen. I mean, obviously right now I think it's the largest, and it's about $500 billion. As Tyler mentioned earlier, our belief is that it overtakes gold, which I think is around 10 trillion in market cap. So that's a 20x from here. And that's why we say it's so early. When people look at the Bitcoin price, they say, oh, well, it's 25,000, and maybe they saw it at 5,000, they didn't buy, and they say, well, it's gone up 5 times. And our view is that it has a long way to go, and that it's still early, and it's still off the all-time highs. But I think Ethereum has a tremendous opportunity as well, because it's the decentralized virtual computer of the world, and people are building on top of it. If you think of it as real Manhattan real estate, people are building these skyscrapers and all these different DeFi projects on top of it. And the more projects that use Ethereum, the more that people need Ether to run those projects. And so value accrues to the holders of Ether. And it's impossible to bound that design space and what the value of that could be. It would be like saying, what's the value of Windows operating system plus Mac OS, all these operating systems combined? It's tremendous. And so I think Ethereum has an incredible road ahead for it.
Well, thank you for your generous insights. Really appreciate it. And I hope you enjoy your stay in Singapore. Cameron and Tyler Winklevoss, thank you for your time.
Thanks so much for having us.
Thank you.
Money FM 89.3.